Welcome to the program. Today, we delve into the evolving regulatory landscape for artificial intelligence across the United States.
It's an interesting dynamic, Alex. We're observing a growing fragmentation in AI policy, with individual states actively crafting their own laws and guidelines. This is happening even as the federal government maintains a consistent innovation-first stance.
That contrast is key. For instance, Colorado's AI Act, with operational requirements set for mid-2026, exemplifies this trend. It adopts a risk-based approach, placing a duty of reasonable care on developers of high-risk AI systems to safeguard consumers from algorithmic discrimination.
Precisely. This state-level focus on consumer protection, transparency, and accountability starkly contrasts with the federal approach. The Trump administration, in its second term, has prioritized an executive strategy, emphasizing fostering innovation and securing American global AI dominance.
That contrast is key. For instance, Colorado's AI Act, with operational requirements set for mid-2026, exemplifies this trend. It adopts a risk-based approach, placing a duty of reasonable care on developers of high-risk AI systems to safeguard consumers from algorithmic discrimination.
Precisely. This state-level focus on consumer protection, transparency, and accountability starkly contrasts with the federal approach. The Trump administration, in its second term, has prioritized an executive strategy, emphasizing fostering innovation and securing American global AI dominance.
Initiatives like the National AI Initiative Act and a recent executive order reflect this. The federal government's policy centers on economic competitiveness and national security, aiming to accelerate AI development by removing barriers.
This divergence creates a significant compliance burden for businesses. Companies operating nationwide must navigate a patchwork of disparate state requirements. Legal experts are now grappling with how to reconcile these two distinct philosophies.
It's a critical point. While federal policy seeks to accelerate growth, states are increasingly addressing the societal implications of AI, such as bias and ethical use. This tension could potentially stifle the very innovation the federal government aims to promote if harmonization efforts aren't successful.
Absolutely. The U.S. is experiencing an uneven transition towards enforceable AI standards across its jurisdictions, a trend that by 2026 will likely define the global AI governance discussion.
An intricate challenge indeed, requiring careful consideration from all stakeholders. We'll continue to monitor these developments closely. Welcome back to our program. Today, we're discussing a significant development in the world of advanced technology. Jamie, it seems quantum computing is reaching a new phase of accessibility.
Indeed, Alex. Experts are marking early 2026 as a pivotal year for quantum computing. We're seeing it move from largely experimental stages to tangible practical deployment, driven by two key factors.
And what are those key factors, Jamie?
Firstly, there are significant breakthroughs in error correction. Quantum computers are inherently delicate, and their qubits are prone to errors or noise. Recent research has focused on developing fault-tolerant systems and algorithms that can either correct these errors or operate effectively despite them. This allows the technology to scale out of laboratories into real-world applications.
So it's about making these powerful computers more reliable and robust for practical use. And you mentioned a second factor?
Yes, the expansion of quantum as a service, or QaaS. Major cloud providers like IBM, Microsoft, and AWS are now offering cloud-based access to quantum computers. This eliminates the need for individual organizations to build and maintain their own quantum labs, much like the evolution of traditional cloud computing. It significantly lowers the barrier to entry.
That makes a lot of sense. So companies can now leverage quantum power without massive upfront investment. Are there examples of this practical application emerging?
Absolutely. Companies like D-Wave Quantum Inc., for instance, have announced advancements in both their annealing and gate model quantum technologies, integrating machine learning into quantum optimization. Furthermore, the industry is developing hybrid quantum classical systems, combining traditional supercomputers with quantum processors for even more complex problem solving.
It sounds like this shift could impact many sectors.
It certainly will. We expect to see considerable impact in areas such as drug discovery, financial modeling, material science, and energy storage. It signals a clear maturation of quantum computing into a commercially viable tool, moving beyond just a research promise.
A truly exciting development, Jamie. Thank you for this insightful overview. Good morning, everyone. We begin today with the look at the latest economic assessment from the International Monetary Fund. Their January 2026 World Economic Outlook update offers some key insights into the global economy.
Hello, Alex. Indeed. The IMF projects a slightly improved, yet steady, global economic landscape for the coming years. Global growth is now forecast at 3.3% for 2026 and 3.2% for 2027, marking a modest upward revision from their October 2025 outlook.
A positive sign, suggesting the world economy is maintaining a steady pace of expansion amidst various forces. However, the report also highlights an important distinction regarding inflation.
Absolutely. While the IMF anticipates global inflation will continue its decline throughout 2026, a key point is that U.S. inflation is expected to return to its target more gradually than initially projected. This slower trajectory for inflation in the United States carries significant implications.
It certainly does. This could influence the Federal Reserve's monetary policy decisions throughout the year, especially considering the Fed had implemented interest rate cuts in the final quarter of 2025. We saw how sensitive financial markets were to these movements, contributing to stock market volatility late last year.
Precisely. Policymakers globally are advised to prioritize restoring fiscal buffers, preserving price and financial stability, and reducing economic uncertainty. The IMF also points to potential downside risks, including a reevaluation of technology expectations and escalating geopolitical tensions.
Despite these challenges, there's an underlying sentiment of cautious optimism. The report suggests better economic conditions could foster risk-taking in the banking sector and lead to a quicker recovery in consumer spending and business activity in certain regions.
A nuanced picture, Alex. The IMF's assessment underscores an evolving global economy that, while showing resilience, remains susceptible to various internal and external pressures. It's a journey of navigating divergent forces.
Thank you, Jamie, for that comprehensive overview.
My pleasure, Alex.